All right, guys, welcome. And also to those people who are joining us for the first time for this week, welcome, welcome, welcome. This week we're going to have a fantastic week. We're going to actually have Ray coming in on Thursday as a guest presenter. And so today what we're going to do is we're going to show you what we normally do in the DMR on pretty much Monday to Thursday. And then towards the end, what I normally do once a week is kind of go over some things that Steve taught us, like some material. Okay, so today I know a lot of people have been talking on Sunday about, okay, so what do you mean by confirm them? What do you mean by all this stuff? So I'm just going to show some examples and explain what that means and why those are very high probability trades. Those are the things that you should be looking for. Okay. Then I also want to let you guys know that yesterday I did speak to you guys and mentioned that I was putting together a curriculum for students starting next week, a curriculum of progression where you can actually monitor your progression. Okay, so in other words, we're going to start off, and each week there will be a certain focus. So obviously I'm not going to say, okay, I'm going to show you the whole curriculum and then you're going to be like, oh, I'm going to do this, no, we're going to focus 1 week at a time, and we will say, okay, this week we're going to do this, next week we're going to do that. Okay, so we'll go week by week, and at the end of each week there's certain homework due. So that way we're showing that whether you're putting in an effort, okay, how much effort are you putting in, how much material are you absorbing. There's the spreadsheet I'm going to give all of you guys who are part of the DMR. That way you can track your results, track what you're actually looking at. So for example, if you are doing homework, next week is going to be pretty much homework week. And if you're doing homework, you're going to keep track of what homework you actually did, M's, W's, how many times did it happen, what time did it happen, things like that. And you're going to keep track of that. And at the end, you're going to be pretty comfortable looking at those patterns and saying, you know what? This pattern worked 80% or 90% of the time. So when I see this pattern again, I'm not going to be scared to take this trade. Okay, we'll talk a little bit about at that time also towards as we move along, things like how to stay in a trade. We talked about that last week, using TDI, things like that. But we're going to go more into detail. I got a couple of questions about, hey, I was scared out of this trade. How do I stay in this trade? Okay, well, we show you how to do that. Okay, it's pretty simple. It's all technical analysis. It's nothing, it's like this, man. You do this, this is the end result. You do this, this is the end result, right? So there is no disparity. There is no emotions involved about, oh, I'm scared, I don't know what I'm going to do. No, it's just like black and white, like this or that, okay? So we'll make it, we'll focus the curriculum so that after you're done, you're going to be very technical. You're going to trade based on technicals. Okay, there's no emotions involved in that manner of speaking, and you're just going to trade what you see ultimately. All right. Okay, so what we're going to do now is we're going to start off with looking at charts. Okay, so you know what? I forgot to even ask you guys if you guys can hear me. I mean, I know I can hear myself, but can you guys hear me?
Yeah, I hear you fine.
Okay, great. All
Don't
right.
see your chart yet, though.
No, nothing. No, I haven't put up my chart yet. All right, great. Wayne, welcome. All right. Peter, okay, great. All right, so what we're going to do is I'm going to ask you guys, now don't go crazy, but type, why do you think the market did not move this morning or pretty much all day? They did move, but not a lot. Why do you think that was the case? I'll give you 20 seconds. Okay, all right. Pretty good. All right, cool. I see most of you got a good idea. Now, how many of you sat up all morning and looked at the charts, presuming and thinking that's going to move? Okay, all right. Now we're going to actually show the screen. Okay, so you guys should be seeing my blue screen, right?
Okay, yeah, we see your screen, Tara.
Yes.
Thank you. and let's show you why today was such a bad day to trade. Bang! 10 o'clock news. That was it. There was no news. Okay? When there is no news, yes, Steve. When there is no news, the markets don't normally move very well because they use the news to hit the stops and then they complete the pattern, right? So when there's nothing there, there's nothing to move. Tomorrow, however, we have a bunch of news. However, some of them are important, some of them are not. All right. So this PMI stuff is pretty important. Okay. Obviously, they're not red. Economic sentiment, 5 o'clock, Euro news, that's going to move, right? The market. Now, you got to remember also, this is the last week in August. Europe as a whole is normally on vacation during August, but more so towards the end of August. For those people who are in Europe, if you guys can, uh, confirm that. I guess there's a couple of people I know that are from Europe and other parts of the world. I know that everybody's on vacation, exactly. So a lot of people are on vacation in Europe, especially towards the last week. Okay, like Spain, for example, man, you go in August to Spain, forget it. There's nothing going on over there. All right. I know. Steve said the market makers not on vacation. You are correct. The market makers, in theory, are not on vacation, but usually the second guy in command, the third guy in command, sometimes they got to take off. I mean, these guys are making millions of dollars. Okay, so they'll take some time off in between, and then the second guy runs it, and they're told that they have to keep it in a certain range and stuff like that. They say, you know what, Monday there's no news, just hold the market, no big deal. Just move it up and down, collect contracts, and we will move it Tuesday when there's some news. Okay, we got to make money, so they're going to make money. But it depends on how wide the range they're going to swing. Okay, so expect some movements tomorrow morning. Tomorrow morning. All right, they're going to move it. Okay, now okay. So there's some people, of course, they got a lot of pips, like Eng. He grabbed 370 pips, and Lyle took exactly 50 pips, right? So, so let's take a look and see what we said yesterday and where we are at. Okay, so in euro dollar, okay, I said going to hit the stop low and rise out of the London session, and sure enough, it did. It hit the stop low and rose, and then it came right back down. Now this is still in the same level. It hasn't really left this level yet. Okay, so your better trade again is still to the long side. You're looking for every reason to go long, in other words. Okay, and how do I look at that on the 15 minutes? Well, on the 15 minutes, this is where the DMR part of it comes in. What we do is we say, okay, here's the big fat W. Anticipated move is stop and low rise, right? One of these patterns like this, the zigzag. Steve talks about the W, VV. Here's your W, here's your V. Okay, hit the stop, low, rise. Okay, I'm going to show you some screenshots of some trades that were taken by other people. Actually, it's right here. I'm going to show it to you right now. Okay, that actually took these trades. Here you go. This is John. John took this trade. Okay, he grabbed, this is euro dollar. Okay, he grabbed it off the low. It's on the 19th. Sorry, this is the 19th. Yeah, give me the wrong date on there. Sorry, here we go. This is Steve. He grabbed it right off the low, off that pin bar. He saw the pin to the low. All right, he saw the 1, 2, 3. He said the diamond fired, momentum shift. He entered the trade, and it was done. He was anticipating stop and low rise, and he grabbed his 50 pips, and then he waited, and he saw a nice M pattern form. Okay, and then he took the entry right after that red candle right there, and he grabbed his 50 pips. So he grabbed 100 pips trading both ways. Okay, trading both ways. That's a great trade, Steve. Okay, this is Hildy. Hildy caught the same move. Okay, she saw the pin to the low. She entered and she grabbed the 50 pips on that move going long. Okay, so I think that's pretty amazing. Um, on one of
Hey,
these days,
Carr.
yeah,
Someone's asking, at the time, they thought the push down was too small to be a stop hunt low on the euro. Can you maybe
sure.
address that?
Okay, ideally, what we were looking for is a stop and low rise in terms of 25 to 50 pips. That would be an ideal situation. Okay. Um, Sometimes it doesn't do it. Sometimes it doesn't do it cleanly like what it did, the way you would like to see it. Okay. You want it to come out like this, 25 to 50 pips. Like, see, like this one didn't even do it. It went like 19 pips. You have to be able to identify the stop line, and the stop line is not always ideal. The ideal is going into that shadow box, right? And not shadow box, the stop on zones, and it didn't quite get there. Now they don't always do it ideally, so that's I mean, short of explaining, saying that it is not always an ideal situation, 25 to 50 pips is ideal. Sometimes it'll do that, just like this. Your entry is literally there. Okay, the stop and high was only 17 pips or 18 pips above the box. Okay, you would like it to be a perfect setup, but it doesn't always do that. All right, so that's, I mean, some people can see it as a stop hunt. A stop hunt is pretty much just inducing, like showing the hand and say, okay, I'm going short, and then pulling it away and shifting the zone, right? If you miss the entry down here, you could have still gotten over here. Your stop is going to be a little bit wider, but you still hit your 50 pips going long. Okay. Uh, the volume was low. Yes, the volume was very low. Okay. No, last night I did not. I mean, I was up. I was doing other stuff, but I was not personally trading last night. All right, so I didn't catch any trades. On the day that I will catch trades, I will actually show you. On Friday, I did. I caught some trades, and I'll show you some of those trades I took. But this morning, I was putting together this curriculum and all the other stuff, so it was not. And also, I knew there was no news, so the market was likely going to move very lightly. It's not going to move nicely. All right, but yes, there was a shark fin. Volatility band was coming in, hit the stop low, and then started rising like that. Okay.
Carr, there's a lot of questions about the diamonds.
Yeah, I can see
You
that other
seeing
diamonds.
those? Okay.
Yeah,
How do you know which ones are firing properly, and are some better than
the
others?
diamond only works after you identify the pattern.
Yeah.
Okay, so I use the diamond as momentum shift. So for example, I see here, right, the big fat M, right? So when I'm looking at this, I'm like, all right, man, extended rise, right? Extended rise is going to bring a consolidation, going to bring a drop back into the range, right? It's Friday too, so they're going to pull right back into the range and consolidate. They throw railroad tracks off the high, trap, and the diamond fire is showing momentum have shifted to the downside. I look at it, I'm like, man, you know what? They came right there to hit those guys. Boom. Okay, cool. There's a 50 pip drop right there, 57 pips. Okay, so only after you identify the move in the direction of the market maker will you actually use the diamonds. You just don't use every single diamond, otherwise you're going to get killed. Okay, here's an M. This is an extended stop, and it came right up to the high. They held it by the spread. Diamond fired, momentum shift to the downside. Boom, 70 pips. Okay, railroad track, diamond fired, pullback, get into the trade. We talk about that a lot, of how to wait for the pullback on these, and then there's your move, man. All right, so that's how I use them. I know there's little dots, and I know Steve make fun of these dots and diamonds and BBs and rainbow stochastics and stuff, but you gotta know how to use them. Okay, gotta know how to use them. For those people who want it, you can just shoot me a quick email. I can give it to you. But this is Steve's, it's called SM, as you can see, Steve Morrow Scaling. This is how Steve taught us how to scale in when he first taught us those classes. This is how he taught us of shifting of momentum after identifying the pattern. That's how we use these diamonds. We just don't pull them in the middle of nowhere. Granted, yeah, it looks nice, right? It pulled back, as it's moving, it looks nice, but obviously, if it's moving, it looks nice. Otherwise, if it goes sideways, it doesn't look nice. Yeah, you know what? I use, this is at my 800, because my color of my screen is black. If I use the blue, I won't be able to see it. You know what I'm saying? So that's why I kind of use khaki. I'm going to use hot pink, but I don't think that'll be, it'll be too nice over here. All right. Let's see what else. How do we learn how to use it? Well, this is where you're going to learn how to use it. I mean, I talk about this all the time in the DMR sessions, and over time, it just kind of sinks into osmosis. You're like, oh man, I know this stuff already. All right. EU is in level 2, man. EU is in level 2. David's funny. Yeah, EU is in level 2. I'm still looking for every reason to go long. Okay, so the only way I would go long, obviously I'm not just going to go long in the middle of a range. I'm waiting for stop hunt low, and then I go long. Okay. All right. So next pair is EJ. Okay. EJ is also in level 2. We were saying it's going to do a stop hunt low rise. We're looking for reasons to go long. It came down and hit the stop low. If you look at EJ, it was better, it was nicer. 1, 2, 3 to the low, pin bar. That's the hammer. Okay, Steve talks about the hammer all the time. Hammer time. There you go. Boom. You take that trade. You can take that, or you can take it right there if you wanted to wait. Only issue when you have something like that is you have a little bit larger stop, but you still got your 50 pips. All right. Stop hunt low rise. Okay, so what's going to happen the next day? Well, guess what? I'm still in level 2. I'm still looking for reasons to go long, right? So I'm waiting for a stop hunt low rise. Okay, next one is, come on. All right, next one is Euro Swiss. Euro Swiss, I'm in level 3. I'm looking for a reason to short. Go hit the stop high drop. Okay, Euro Swiss. As you can see, it was all chopped. There was no trade in Euro Swiss. Just want to quickly show you a trade in EJ. Okay, that somebody did take. Hildy. Hildy grabbed it. 1, 2, 3 to the low. She said 3 swipes to the low, entered long on that pin bar. She took that trade long and she grabbed 50 pips out of it. All right. Hildy did. I mean, this obviously doesn't say demo, so it's a live account. Okay, it doesn't say demo over here. It's a live account. It's a live trade. All right, she took the trade. Did good. All right. Well, as we go along, we'll see other trades. All right, cool. So next one is, like I said, Euro Swiss. Euro Swiss is nothing going on. I'm looking for reasons to short Euro Swiss. Okay, this is level 3. It's been consolidating. Go ahead. Were you saying something, Granny?
Someone, yeah, on the Euro Swiss, someone emailed me and you're on the 1 hour. I need the 15 minutes.
Oh, sorry. Go ahead.
It didn't look the same. They shorted it right. Oh, I'm pointing like Makoko. The
Right here?
railroad tracks to the mayonnaise. No, right out of the blue box.
Okay.
Right there.
Right there. Okay.
They shorted that and was up nicely, I don't know, 30, 40 pips or something. Didn't quite get their 50, and then it took it all back. And I said, well, that was just the luck of the draw, because actually that probably, would have been a okay trade, but then the rest of the day it was just red, green, red, green, red, green the entire time.
Yeah, this was horrible.
But they did take those 2 pins to the mayonnaise.
Yeah. Okay. took 2 pins to the Mayo, right? If you took the trade right here, okay, and if you are up about 43 pips, you do not close your trade minus 23, okay? Like Steve said, that's the crime, because then you took a 70 pip swing, right? Because if you were up 40, let's say you were up 40 and you had a 20 pip stop, right, and you got stopped out minus 20, you took a 60 pip swing. You left the 40 behind and you took a minus 20 loss, so you had a 60 pip swing. You don't do that, okay? So if you're up, especially for me and for Ray, normally by 25 pips, we automatically say, man, we're gonna take a scratch if it comes back against us. That's how you manage your trade. That's what we normally do. Okay, so if it came against you, you'd be like, man, you know what? It didn't look right. It's supposed to continue downward. Okay, the price is supposed to keep trickling downwards, not coming back upwards. All right. So if this was truly a stop hunt, they're not going to come up. Remember, Steve says once a stop hunt, they shift the zone, they move away from it. They don't shift the zone and come right back up. Sometimes they stick around at the high, but when they shift the zone, it got to move. Okay.
Hey, Carr, this is Kim. Actually, the Euro Swiss was the only trade I did take this morning, and my chart looks slightly, I'm going to say totally different than yours.
Really?
Where it dropped, yeah. It made a beautiful M there and gave me a picture-perfect entry. Your candles are completely different than mine.
And I'd have to say the same thing, too, because
okay. You know what
when I was looking at
towards the end, Kim,
I'm sorry?
Towards the end, I'll just give you access to the screen and you can show the trade.
Okay.
All right?
Sure.
That'll be, because I don't, if you can't explain on this ugly looking
yeah,
thing,
I can't
which has
because your candles don't give the pattern.
Yeah, no, it doesn't,
amazing.
man. It's all whacked out.
Yeah. But
when
it was
I
a
was
beautiful
talking,
trade. It was very quick. So, okay, go ahead.
When I was talking about the 2 pins to the mayonnaise, the gentleman that emailed me, he was taken out on the very next candle that went all the way back up to the mayonnaise. And your candle does not do that.
I think
Yeah,
there's
right
a
there.
conspiracy over here.
I don't know. His spike went all the way back up to the mayonnaise. So Kim's right. It does look different.
But
Okay.
that's MIG.
That's MIG demo. What are you gonna do? So anyway, this is just chop. I didn't see the M over here, so obviously I couldn't say that with an M. But Kim is gonna show her chart with the N, and you can see a nice, beautiful M, and you could have taken that trade. All right. Next one is pound dollar. Pound dollar, we were in level 3. Okay, they're still trying to get out of level 3. Okay, I'm still looking for every reason to short. Hit the stop high drop. Okay, so pound dollar. Okay, this is my pound dollar. Chop. Back forward, back forward, back forward. Didn't leave the range though, right? Remember? It gotta leave the range to hit the stop low and high. If it doesn't do that, you don't anticipate. You don't be like, oh, I'm gonna go long right here. I'm gonna go. No, you gotta wait, see what the guys do first. Okay. They didn't go above, they didn't go below. The only time they went above, induced long, trap move. You could have taken the short right up here. Okay, that's the first leg. The second leg is down here. Okay, either one was fine. If you're a little bit more advanced, you could have taken the first leg short. Notice how you were up about 25 pips. Guess what? They came back to hit you. All right, and then they really dropped them. Then they moved the market. Okay. So that was your M. Again, still looking for reasons to short. Okay, but because we're in level 3, you gotta remember you can trade this back up if they go all the way back up. All right, that's why the confirmed M, the confirmed W, the patterns is very important. All right. Pound yen. Pound yen, I'm in level 2 still. It was still in a big chop. I'm still looking for reasons to go long. All right, and this is pound yen chop. There was nothing. There was this big spike, and then everything else is in between, just going back and forth inside the range. They blew out the range with a spike, and then they just kind of stayed within a 50 pip back and forth motion. Okay, yeah, hindsight you can say, yeah, that's an M, or, that looks nice. No, on the hard right edge, you would have never taken that trade. It's very hard to take that trade because it's not clear. We're looking for clear patterns, long of the low, short of the high. Everything else in the middle is called, especially in the Asian range when it didn't break it and didn't do the stop hunt, it's called, there's no trade, right? It's just chop. So if I don't see anything clear, I just write chop when I do my homework. If I see something nice, 3 hits to the low, then I'll mark them. Okay? If I see nothing, if there's missing things like that, then I'll just write chop. Because it is chop. 2 hours are going to pass and you're going to be like, oh man, I didn't take a trade. Nothing. Level 2, I'm still looking for reasons to go long. Okay? Pound Swiss, level 3. If you can see, boom, right there, right? 3 hits to the high, big fat M. I know you guys are asking 1,000,001 questions. Just bear with me for a little bit. I will answer them once I get a chance to look to the left and look at my next screen. So here's the big, well, I would say big level 3. How about that? Okay, they've been just kind of chopping the level 3 up here. Okay, so I'm looking for every reason to go short. Okay, so obviously the best place to go short is off the high and long off the low, obviously, right? But I'm going to see what these guys are going to do. So again, this pair, pound Swiss, was nothing but chop. All right, I mean, come on, look at this. I'm sure there's missing data here because I see 2 red candles and one is higher than the next. Obviously there's something going on over here, something crazy. All right, so there's some data missing, but nothing clear. But from here to here is 111 pip, which is crazy. Okay, if you notice the previous day, it did do it on a Friday. It did a nice decent pattern, looked like an M pattern. Okay, how do I know? I'm in level 3. I see a big multi-day M. Next, I'm expecting hit the stop high drop. Okay, as a matter of fact, I actually did take this trade on Friday. Okay, I noted that's my big fat M, right? Multi-day M. I took the short of this little M over here, expecting hit the stop high drop, and sure enough, boom, exit off the 200 EMA. All right. So anyway, that's the pound Swiss trade on the previous day, and then today was chopped. There was nothing clear on that one. I just wanted to quickly point out pound CAD. Okay, pound CAD. I was mentioning that yesterday. Normally I don't cover pound CAD, but I was mentioning that yesterday that pound CAD looked really nice. Level 3, you're looking for hit the stop high drop, all right? And guess what these guys did? They came out of this big fat M pattern, multi-day M pattern. They came and they threw a secondary M right here. They gapped up, they came back down, they came back up, hit the stop high. Notice the pin went slightly above the Asian high. Induced long, right? Induced long, pullback trap. Your entry is literally right on the trap, and then it dropped 116 pips. Okay? My buddy Nelson picked up the trade. Just wanted to show you that people do see these things every day, man. And Nelson has been doing some fantastic trading. He grabbed it, as you can see. That's his entry, and boom, that's where he got out. That's his entry right up here off the high. All right, fantastic trade. All right, trying to see. Oh, here's Lou's pound dollar trade. He saw that little M pattern. Okay, and then he took that trade, entered right there. He got it for 40 pips right over here. And he identified the M pattern. All right, and what else? I think that's all the trade that was sent to me today. And this is Nelson's trade on Friday. He saw that big M pattern. He saw the high, and he took it right off the high. As you can see, this is stop loss. His green is where his entry is. To the short side, this is his target, and you know what happened? It went right through it. Okay, so all right, pound CAD, right, so next one I'm going to do is the Aussie dollar.
Hey, Car,
Yo.
can you maybe blow up one magnification, because a lot of people are saying that's hard for them to see? The
Oh,
pink
sorry.
and the green. No, that's okay. Just thought you might want to know.
I will blow it up. Yeah,
Hey,
normally
Steve, he will do a recap.
yeah, I'm going to do a recap. No, normally I kind of don't blow it up.
We
But
always
here we go.
recap so everyone gets it.
So let me just blow some of these charts up because yeah, it is kind of small.
Yeah.
But it's not very clean today, so it's okay. But on a nicer day, normally what I'll do is I'll click on each one of them and I blow it up so you can actually see it. But this was the trade that was taken, and I showed it to you. Okay. What happened with Aussie dollar? Interesting. This is my dollar Swiss. Okay, let me just blow that up. Again, there was no nice trade in dollar Swiss. Dollar Swiss, I was expecting it to. There we go. Okay, I'm in level 3. I'm expecting it to hit the stop high and drop on this pair. But it's still inside the range, so I'm looking for every reason to go short. There was none this morning. Okay, there was none this morning. It just went sideways like that. So there's some missing data in here, but yeah, it's just inside the range like this. Wait for the stop on either above or below, and then look for the trade. Right? It'll do something like this. It'll form an M. You can either take it right off the low like that, or you can wait for a retest off the high, especially when a diamond fires and you're like, man, okay, momentum has shifted to the downside. Boom, 53 pips. You see? It's there every single day. Okay. Dollar yen. I'm just going to do it on the 1 hour chart. Obviously, as you can see, level 3, it hit the stop low and started kind of like meandering upwards. But it's hitting the stop low and hitting the stop high, and it's still in level 3 right now. It's still kind of going back and forth, not really doing much of anything. They're holding this pair. Okay, and this is the Oz. We were talking about that. This could be level 2, continuing upward, or this could be a reset for it to hit the stop high and drop. Obviously, the better trade is to hit the stop high and drop. Okay, so let's see on the 15 minutes. Unfortunately, I don't know what happened to my Aussie dollar chart. I just don't have it. Okay, and the last one I'm going to do is dollar CAD. Okay, dollar CAD. We were saying on the 1 hour chart. Okay, I'm in level 1 off the high. Okay, this peak formation level 1. I have these things marked. I don't know what happened to these things disappearing. Interesting. So this is level 1. Okay, so I'm looking for reasons to short off the high. Okay, so dollar CAD came right out of the Asian box, hit the stop high, and started dropping. Dropped about 50 pips right to the low, and then it turned around, did a little half a Batman, and took back off again. But it's still within the range, so I'm looking for reasons to short. Okay, so we formed another M pattern. I'll short it. But this one going long didn't look very nice. If it was nice railroad tracks, it would have been good. But yeah, I'm sorry. I move my mouse quite often, man. Something I have to. There you go. So hopefully, you guys can see the difference, right? Railroad tracks. This is a half a Batman. See, like that, half a Batman. Notice 1, 2, 3 candles, consolidate. They always hit it with 3 candles, like this. 1, 2, 3 candles, pull back. 1, 2, 3 candles, hit the top one more time, pull back. They'll always do it with 3 candles. I don't know why they do that. They'll hit it with 3 times and then they'll consolidate. Then they'll hit it again and they'll consolidate. That's how they just do it. All right. So you can actually see it with the candles, and you can also, not obviously not every time, but you can also see it especially when they hit the stops. So if you're looking for stop hunts in line with the market maker trend, then look for the 3 swipe against. They're going to go towards the peak formation, and then you're going to trade away from it, away from the peak. All right, it's a very telltale sign. Okay, is there any thoughts, the difference between anticipation and prediction? Okay, prediction is when you say, you know what, this is my bias, this is what I'm going to do, purely based on technical, not on a gut feeling, not what I think. It's purely based on technicals. Okay, you say, you know what, this is what I predict. Like Steve said, you got to predict, have a bias of what they're going to do, and then when they present, you take the trade. If they don't present, then you pass. If it does something different than what you think it's going to do, then you pass. Don't try to fit it. Don't try to go back and be like, you know what, I'm expecting stop on low rise, but it's stop on high drop. You know what, I could be wrong, so let me just try to make it up. No, if it doesn't fit what you think it's going to do, you pass on it. Okay? Anticipation. Can we get better sounding? I see the little meter over here seems to be fine with me. It's pegging right to the high, all the way to the red. Anticipation is where people get jammed up. Okay, anticipating a railroad track, anticipating the high of the day or low of the day, anticipating the second leg. Okay, that's where you get jammed up. If you stop anticipating and trading the pattern after it completes, you guys will kill it, man. I'm telling you. So that's the process we're going to start next week. We're going to slow it down and say, okay, this is what you're going to do. This is your assignment for this week. This is the focus for this week. Next week we'll do something else. And progressively you're learning and you're improving, and over a period of, it's a certain period of time, about 2 months, you should be able to say, you know what, man, I see it. I see what Steve has been talking about all along. The problem with everything is we know something, right? Obviously we did some research on Forex, and we went to baby pips, and we went online, and we did 5 million other online stuff, and we looked at things, okay? And then after we found out that, hey, this is what we know, and then when Steve started talking and teaching us stuff, we started incorporating what we know with what we really don't know but we just learned, and we start putting stuff up together. And when we start mixing the stuff, thinking that, hey man, you know what, I'm going to make this mine, I know the CCI very well, or something I used to like to do before, so I put CCI in, and I started putting different stuff in, and even including fibs. Okay, because one of my very good friends was a very good fib trader, and he showed me how to do that stuff. So I started anticipating where the reversal is going to happen. Okay, so when you start anticipating what's going to happen, you get jammed up. When you trade what you see and the pattern confirms it, that's why it's called a confirmed M or a confirmed W. We'll talk about that today. Then we will. Then your win-loss ratio improves tremendously, 80-90%. Accuracy. Okay, we'll talk about that stuff. It's all good. It's all good stuff. There's probably like 5 million questions, man. Oh my goodness. Well, Kim was very nice. Yeah, Kim was nice. You just selectively picked all the easy ones. I'm kidding, Kim.
Ah. Okay, you want me to start with
I'm kidding. Yeah.
How do you draw your level boxes on the 1 hour chart, Car, and have them show up on the 15-minute?
That was really simple. You just change the time frame.
Change the time frame.
Yeah, so you just draw it on the 1 hour, right? This is my 1 hour. I draw it, and then all I do is after I'm done, I just click it on the 15 minutes, and boom. So let me just do it on a yeah, like here. Like let's do it on this pair, right? So I'm just going to click it on the 15 minutes chart, and then it's going to start jumping around and dancing around for a little bit, and then as you can see, the 1 hour box, 1 hour stuff. Level is actually drawn on the 15-minute chart. Okay, you see how crazy this is? I mean, you can see the nice W here, and then the next day is what? It's a straightaway, right? Hit the stop low, rise, or straightaway. You can trade these on the 15 minutes, but if you're going to be like, all right, next time I'm going to go long, and then you get jammed up here. You're like, wait a minute, what happened? Well, you know what? You're in level 2. You're in level 1, right? To the downside. So you're looking for every reason to go short. Okay? That's why it doesn't see like this. It'll consolidate one day and then it'll drop. It doesn't have to drop when you want it to drop. It's going to drop when they've collected enough contracts, and then they're going to start moving it. Sometimes they're not as clear. Sometimes they're crystal clear. They'll come up, they'll form these. Look at this beautiful stop hunt, 2 pins to the mayor. You take that trade, it's over, man. Put your stop right above the high, 15 pips, boom. Grab 50 pips, grab the second leg, and start going long. Diamond will fire, momentum shift to the long side, grab it, another 40 pips up. All right, that's the stuff. But notice this is all in one level, back and forth in one level. Okay. All right, let me just do a quick recap. Okay, and then what we'll do is I'm gonna let Kim show some of her trades if she took some trades Friday and today, and then we'll do a 5 minutes break, and then I'll come back and I'll talk about confirmed M's and confirmed W's. Okay, I think that's our game plan here. Okay, so euro dollar, I'm looking for reasons to go long. Okay, pound dollar, I'm looking for reasons to go short. I would normally do it on the 15-minute chart, but the 15-minute kind of not really, you know, it's all blown up, and I got to shrink it and stuff like that. So just look at it like this. Yes, I got to stop. I got to make my mouse bigger, man. I had my mouse bigger. This mouse kind of shrunk, so I got to make my mouse bigger. Same deal. EJ, I'm looking for reasons to go long. GJ, looking for reasons to go long. Dollar yen, same thing. Dollar Swiss, I'm looking for reasons to go short. Euro Swiss and pound Swiss, looking for reasons to go short. It's sitting in level 3. Listen, guys, these guys can chop. I don't know if you've seen this pound Swiss. I'm going to pull the chart, but I'm not going to do it because you guys are going to get a headache and feel like you're getting seasick. A couple of months back, Steve showed that they held dollar Swiss for like 2 weeks straight like this, just back and forth, just chopping back and forth. Okay, it happens. The better trade, I would prefer this to go short, but this is in level 2. The reason I say that is because from here to here is about 86 pips, almost 100 pips for a level. So it's close enough. Okay, it's close enough. They don't always have to, oh, we're going to meet exactly ADR. No, they don't do that exactly ADR stuff. Okay, sometimes they'll go slightly higher, enough to induce and trap and move the other direction. Okay. Or the yen, I'm in level 1. I'm looking for reasons to go long. Isn't that funny? This I'm looking for reasons to go short. This one I'm looking for reasons to go long. And pound CAD to the downside, Euro CAD also to the downside. Look at how they've been coming to the high, inducing, trapping, and then they're just going, pretty much they're just going sideways. This is the high, right? They've set the high, they haven't come close to it. They've just been trying to induce to the high. So let's see if they have to hit the stop first. Okay? Don't just put a pending order right here. How do you know how far above they're going to hit the stop? You have no idea. Wait for the pin to go above, come back and close. Then you're like, okay, man, now it hit the stop. Now I'm ready to go. Okay? And I think that's pretty much all I got. So why don't I transfer this over to Kim, and Kim can show some trades, and I'll answer some questions in the meantime, and then we'll take it from there. All right?
Okay, sounds good.
Okay, so here we go.
Okay, just a quick check. Can everyone see my screen now?
Yes, ma'am.
Okay, very good. Well, let's just start with today's trade. The only trade I took this morning in the New York session, and what I was saying was here on the Euro Swiss, let me blow this up so people can see it actually. I saw this beautiful M formation. So when this candle right here closed red, You know me, I measured the length of this candle is about 25 pips. So halfway up this candle is my entry point. This way it controls the amount of my stop loss. And so I entered actually right here as price came up, and it actually went almost like 1 pip above this high, and then sucked right back down. So ended up exiting the trade right here very quick in really 2.5 candles, if you will. So it was a very fast 50 pips. And that was the only trade I took this morning that I saw that was worthy of my time. Now let me just go back to Friday and show you what I did on Friday. I actually traded the London session because I had another commitment in the morning, so I couldn't be here. So here, when price had come out of the blue box and it started making a move, you know, almost 1, 2, 3 to the high or to the water, and it threw these railroad tracks right here. So as soon as it hit the water, this candle formed. Again, I measured the candle, and this candle width was, it was 36 pips in length. So I measured into the candle, and I actually watched price, and it kept barreling up to the water. So the entry would have been like right around here underneath the water, 18 pips into the candle. So I actually waited to see if it would actually tag the water, and it did. So I got a really good entry price on this, and I was out immediately in 2 candles on this one right down here for 50 pips. So that was, and then, you know, I kind of move off a chart once I take a trade, and completely missed an opportunity to get another really quick 50 pips that I know a lot of people took, because this was a very powerful multi-day W where I think a lot of people saw this, where price came down right to Thursday's low, closed right on it, and then shot this beautiful green candle up. So, and then the other trade I took on Friday was on the pound dollar. About at the same time I saw price moving up, it threw this candle formation. I measured the candle, marked off my 50% into it, and entered the trade right here as price pulled back into this candle. It was like a semi-tweezers, railroad tracks, if you will, and out right here for 50 pips. So it was real quick and real easy on Friday morning, and I was done within 42 minutes, I think, getting 100 pips that morning. And that was it. So that's it. Carr, you want to take it back?
Oh, okay.
Or
That
is
was
there any
fast,
questions
man.
I
I only got to read 3 questions.
Okay, good. Kim, I took the same trade, but I was a chicken and only targeted the Mayo. How do you evaluate how far you'll stay in a trade? I got out because I thought it would bounce off the Mayo. Jimmy, are you talking about this pound dollar trade right here? If you can just, oh, Euro Swiss.
Euro
Okay.
Swiss.
Euro Swiss, yep, got it. You know, I just watched price action, and this was just barreling down, and once it closed below the Mayo and the water, there is no reason to leave this trade. I mean, this trade is going to fulfill itself once you see this happen. So there was really no, you know, I don't put a limit in here. I actually watch the price. I mean, my limit is 50 pips. So I just wait for this candle to close. And now if this candle had closed and made a hammer, yeah, I would have run away from it and taken what I could have taken. But because it closed with such momentum down, this thing was still moving down. And you'll notice it made 1, 2, 3 to the low, and then formed this pattern, and could have traded this to the upside right here off this. So you see this, you know, like Steve says, they move in cycles of 3 levels, 3 days, 3 pushes, 3 swipes, and you see this often. So 1, 2, 3 to the low, they're done on this, you know, part of the move. Okay. Good question though. Let's see what else here. Please, Kim, when you measure the candle, do you measure from the high to low or from open to close? Ben, I measure the full candle. I include the wick. And Denise wants to know why I measure the candles. Well, I measure them to control the risk in the trade and to get a really a good entry price, because think about it, if I can get a better entry price, I'm going to be able to exit that trade much quicker, and there's a higher probability of me getting 50 pips if, you know, on a 25 pip candle, I wait for price to pull back halfway into it. So now I've just like saved myself 12 pips, and I'm ahead of the game much quicker. So that's why I do it. So for risk management, and then also to exit the trade quickly. Okay. Kim, you don't mention levels. Do you pay attention much to the levels when looking for trade entries? No, I don't. I'm aware of the levels, but that's like the last piece of the mastery of Steve's methodology. The real methodology comes in knowing how to see the pattern and then execute on the pattern once you see the pattern. Okay? So you know, like I think people have heard me say before, when I first took Steve's class, I was, you know, obsessed with having to know the levels, and, you know, I was screwing up my trading. So I said, screw it, I'm just going to trade patterns, and that's when my trading really turned around. Okay. For some reason, I've lost the questions, Carr.
You did?
Oh.
Yeah, let me see if I can bring them. Oh, here, I got them back. Okay. Sorry. I don't know what happened.
Someone wants you to...
What?
Go ahead.
No, go ahead.
Someone wanted to know if you'd look at the 7 pins to the mayonnaise on the euro pound.
Euro pound.
Euro pound. We probably don't even have that one. Oh,
well,
yes,
I have
you
it
do.
up here,
Yeah.
but I don't trade it.
Something about 7 pins to the mayonnaise.
I'm not sure what the question is. I don't get it. You mean like right in here? In the Asian box?
I would guess so. I guess.
What's the question? I can't see it, Granny. So I
No,
don't know
sorry,
what we're
Euro
talking about.
Swiss, he says. He said
Okay.
no, he was talking about the Euro Swiss right out of the Asian box.
Right out of the
7
Asian box.
pins to the mayonnaise. Oh, yeah.
Yeah, it was
right in there.
it was just shop. I mean, I'm not sure what the question is with respect to that, though. What I see the pins. I'm not sure what the question is, Granny. I don't know.
Well, I don't either, except that we're always talking
Okay.
about
He was looking to go
pins.
short. Okay.
Yeah, 2
You
pins
were looking to
them.
go short. Well, you
Right.
could have, you could have taken it right here, and you would have gotten 30-some pips, but you probably would have had to, stop yourself out here. So let's say you took this railroad track right here, and you measured like I do, like I've showed you people. I'm not sure, you might be a new person, but I show people in here how to measure this. So this candle was 39 pips, so I would go 20 pips into it, mark it off, and say, okay, I'm going to get in, when price pulls back, or I'm going to wait till it, if I see it heading to the Mayo, I'm going to try to get it as close to the Mayo as I can, and you may have gotten some pips on it, or you may have just had to take it off.
Listen, I mean,
you wouldn't have gotten stopped out, but you.
I think the important thing to remember,
clear
there's no
pattern
pattern, right?
That's right. There's really no pattern. I mean, this is a pattern. This is what I saw. This is this is an M. They held the market. They worked this area, as Steve would say, for 1, 2, 3, 4, 5, 6 candles. And what does Steve say? 30 to 90 minutes. Well, there's your 90 minutes. They worked this area. They hung out right below the prior day's high. They weren't taking this up. So you got to look for the pattern. And like John says, not every pin to an EMA is an entry, which is very, very true. Okay.
Okay, no, that is an M on Euro Swiss, guys. I mean, Kim had it marked right there as an M on Euro Swiss, so that is an M right there. Now, you remember we were just talking about anticipating and predicting. You got to trade off the high and off the low of the chart, man. If the chart, if you're going to go short, you want to be on the top of the chart. If you want to go long, you want to be at the bottom of the chart. Okay? You don't want to trade in the middle of the chart when it's going back and forth, you have no idea which direction it's going to go. You know that if you want to be 90% accurate, you got to pass on those trades in the middle like that. Just don't guess on it. Be like, you know what? It's the middle. It could drop, yes, but it's not clear to me. I'm going to pass. All right? That's your job. Yep. Every day the market makers are going to set a high and low. You just have to, your job is to find it and trade off the high and low. That's it. Okay? Anything in the middle, you just kind of pass on it until you become very good. Okay, then you can trade it. But then even if you trade off the middle, you're going to trade a very small position. You're never going to trade a very large position off the middle because you have no idea whether you have a 50-50 proposition, right? You don't know whether it's going to go up or go down. All right, guys, why don't we just take a 5 minutes break, and then we'll come back, and then we will do another 10-15 minutes of pattern recognition and stuff that we talk about, and then I think we will move forward from there. Okay, we'll call it a night after that. All right, so give me 5. Sorry. I have my mute on. I apologize. So this is the big M pattern. Okay. So the pattern. That's the business. Okay. So we have to understand the footprint of the market makers, and how we do that is by looking at the pattern and trying to figure out exactly not only where they went, but what they're going to do next. Okay, as you can see, obviously this is a beautiful M pattern. Okay, what makes this ideal setup? This is called a big M or a multi-day M. Okay, set between 2 sessions, between 2 days, right? You can see the 3 swipes. The 3 swipes is very, very important. It's an inducing pattern. 1, 2, 3. It traps it by closing above the high, induce people to go long. Remember Steve said, your trading will turn the minute you see it from the other side of the curtain. Okay? That's all they got from the other side of the curtain. They hit the stops one more time, close right inside the range. That is a confirmed pattern. The diamond fires, letting you know my momentum has shifted. Okay, and then you take your trade right here and it's over. Notice where they come up to hit the stops again. Okay, but if you know this is the big fat M pattern, you know this is a stop hunt. You could have gone in, you think, oh yeah, take that trade, and then come back again, take that again over there. All right. This is what you guys should be looking for. Again, this is a different day. As you can see, this is the big pin. It comes up, it throws another M pattern, confirmed M also. This is 50 pips drop. Okay, it comes back up. It throws railroad tracks right at the high. Doesn't that look like the previous trade we saw? And this is what we call a high test candle. You see this little hammer, inverted hammer? That's a high test candle. This is the candle where you measure the previous railroad track. If it's 20 pips or more, you say, you know what, I'm going in half the distance. Okay, half the distance, you're going to take your trade right in the middle and let it drop from there. Okay, guess what they do? Just like the last trade, they know you got the right move. They come up one more time to hit the stop. The swing from here to here, anywhere from 30 to 50 pips. That's what they normally do. Hit the stop again, momentum shift. Look at that big diamond, and then it just dropped like 5 million pips after that. Okay, they hang around, like Steve says. When they shift the zone, they hang around, collect contracts. Sometimes they'll come up, they'll hit it one more time for those people who got it right, and then they just move. This is what you guys should be looking for. Here's another confirmed M.
Hey, Carr,
Yes.
excuse me for 1 second. Someone's asking about the diamonds. Do they fire when the candle's closed?
Yes, the minute the candle closes, they fire.
Yep.
They do not fire before, and they do not repaint. They don't be like, oh, you know what, this other candle looks better, I'm going to jump from one candle to the next. You know, like the level 3 semaphores, those move, right? The 3-level semaphores move, fractals, they move, all those other things move. This diamond doesn't move. That's why they paint all over the place, right? They're all over the place. They're only valid after you find your signal. Your signal. Okay. Steven, I think you should have it, buddy. You should have. It's called SM scaling. Steve handed that out like a while ago. He used to have it in his folder from before. I think he just cleaned up his folder and he doesn't have it. Peter, if you want the diamond, just send me an email. Anybody that wants the diamond, send me an email. It's fractal, FRACTAL, pips at Yahoo. I'm sorry, at Gmail, at gmail.com.
It's also in the student folder.
It should be, it should be in the student
it is.
folder.
Mm-hmm.
Okay, it should be in the student folder. What are fractals? Fractals are almost like pivot points. Okay, so when it takes out one pivot area, you have a fractal drawn from here to here, and then when it takes it out, then they'll shift the fractal, and they'll be like, okay, now the fractal is from here to here. So it's kind of, don't worry about it. It's not important, man. It's not something you're going to ever use, and it's not important. Okay. All right. So this is the confirmed M. Why? Notice how that little green thing goes right above there. Why did it do that? Induce short, increase the spread, absorb the pendings, and hit the stops all in one shot. The minute they close, you're in. As you can see, they go 1, 2, 3. Back up, trap, shift, consolidate. Steve always said, shift, consolidate, look at the contract. Okay, you want to go long, we let you go long. And then they know which direction they want to go that way. Okay, another M. I'm just showing M, then I'll show you W's. First leg is the pin bar, second leg is the railroad track. That's the confirmed pattern. All right, you've seen this over and over again. Okay, first leg, second leg railroad track, diamond 5 is even nicer, drop 50 pips. Another one. Second leg railroad track, right outside the shadow box, drops over. Oh yeah, Fred is saying the diamonds are included in the 2010 but not in the 2011 May student folder. So that way you guys know. All right. Okay, here's the next one. Here's the confirmed M's, the big, we talked about that already. See? Big fat M. This only happened a couple of days ago. You guys can recognize this. Closed above, came right back in, diamond fires over. It's the same thing. If you guys just look for this stuff and put in bigger positions, you guys don't have to trade every day. All that little pins in the middle, start making stuff up, forget it. It's over. Here's the big W. Second leg railroad track, just like the M, right? Enter. Diamond fires, long, over. Not something new. It's the same thing. Here you go. Here's the W pattern. This one goes below the first leg, comes back and closes. Either you wait for the diamond, or you can go in right here. Right there, or right there. Either one is good. It's more than 100 pips going long. Here's another W pattern. First leg, as you can recognize, this pair just happened recently. Close, pin, green, it's over, long. Alright, this was the euro dollar pair just 3 days ago, last week, Friday. Here the big confirmed W pattern. You can see it's the confirmed WY. You drew a pin below the first leg, comes right back and closes. Your entry is right there. On your stop is literally just the pin bar. And here's a nice M pattern, confirmed. I didn't say enter here. You wait for the second leg to show which direction it's gonna go. Diamond fires, momentum shift, take that trade. All right. When you get more advanced, you learn how to trade this 2 pins to the water right here in the middle of the range. But that's for a later time period. Okay. I think I'm done for now. There's other stuff in here, but I'm not going to talk about that. There's railroad tracks and things like that. We will leave that for another time. The focus of what this was confirmed M's and confirmed W's. Now you guys know. All right. If you guys did no other trade but just waited for these, you will kill it. Your percentage is going to go from 50 or 60 or whatever it is to like 80-90%. All right. So if you're just looking for this, then you can trade probably 12 pairs because you're just waiting for a very specific thing. Okay? If you're trading inside the range, then you can trade obviously a lot fewer pairs because there's going to be more stuff for you to be focused on all the time. Because think about it, if you're trading confirmed M's and W's, how long does it take? 90 minutes to form the second leg. So when the first leg forms, you can walk away, run around in your run around the house or on a treadmill or something, and then you come back and you're like, okay, man, 90 minutes is up. Let me go and check my second leg. All right. So yeah, like David said, man, if you're trading confirmed M's and W pattern, because guess what? M's and W pattern, every one of them I showed you are either in the high or the low of the day. They're not in the middle of the range. Very, very few you will find in the middle of the range. And if you find them in the middle of the range, you can pass on those. Right? I mean, look at every single one of these M's are off the high and the W's are off the low. M's off the high, W's off the low. You don't find an M in the middle over here. They don't really work. Right? David's hilarious. Is it that predictable? Is it that? Yeah, this is the part of the business. This is what you're supposed to look for. This is what Steve taught us. Okay, we start making stuff up and start trading in the middle of the range. We're like, oh, here's the 2 pin. I'm going to take it. I'm going to do this. I'm going to do that. No, man, wait for it to come out of the box, hit the stop, induce long, and take the short. Let's presume you got stopped out over here. Okay, look at this. 1, 2, 3, man. First leg comes back, hour and a half later. 1, 2, 3, 4, 5, 6, 7, 8 candles, 2 hours later. Right? Yeah, Bowser's thing is easy, man. Bowser, Bowser can't wait to see this guy again. Are you coming to Dallas, Bowser? All right. Well, you know what? I think I've given you a very big piece of the puzzle, which you guys already should know and should be trading. Okay, studying the candles, which we talk a lot about during the DMR, how what this candle is trying to do at the high. What are they trying to do? Trapping, things like that. We go more into detail. And the reason we go more into detail in the DMR is because it's every single day. And also, it's only recorded for 24 hours. So it's not floating out there for, for the next 5 or 6 years or however long the form is going to be up before it gets, put archived and new stuff come in. So because it's there for a short period of time, we can go into in-depth. That way it's more fresh, and we have to really look at the hard right edge and tell you, hey, this is what we think is going to happen tomorrow. This is what you're going to look for. And also the curriculum is going to help a lot. So, all right, guys, I think I'm going to stop it right here. Hope you guys learned something today. The newbie lesson is going to start next week on Monday. Next week on Monday, we're going to start the lessons. We're just going to take a chart, and I'm going to show you actually how to do it. We'll go through it, and then from there we progressively move forward. Every week is going to be a different focus, okay? And by the end of the 2 months, believe me, you will know what to look for. I mean, that's exactly what the reason you guys decided to trade, right? So you will know what to do, okay? All right, guys, have a great night. Thank you very much. Glad you guys could join us today. Kim, Granny,
Yeah,
thank
keep
you.
coming back. Yep. Thanks, Car.
All right.
Thank you.
All right.
Good night.
Guys. Ciao.
Good night, everyone.
Good night.